Hey guys, how's it going? Welcome back to this recap for the Thursday, and basically the same old, same old. Like and subscribe to the video. Like I said before, put comments down there, questions, anything that comes up that you have questions about, we can definitely try to answer, even on our lives or in our recaps here. But let's go ahead and just jump into price action and take a look at it. We have been continuing to grind sideways right below the kind of that threshold area. We are looking right around that 71,000 is kind of the line in the sand that we're watching. And you can see that it overall, like over the last couple of days, it has been kind of butting up into that, and it's been kind of testing the lower areas as well. But there's not a lot left down there, I will say that. So now let's go ahead and take a look at some of this price action, and I'm just going to open this up a little more for you, and you can kind of see it, right? So like this was the strong last run down. Yeah, it held up in this area right around above that 71,000, then wrecked down below it. This also, if you're looking at the bigger time frames, this is a big key area for us on the macro run, the bull run up that we're in. It's in this transitional period, and we are counting down. I'll flip over to that just so you can see it. You can see 14 days, so we have, what's that, 5 more days to rotate this back up. Or we're really going to start to put ourselves into a longer term cycle here and bleed down. Now, if it bleeds down or doesn't, it doesn't really matter. People are going to hold, they're going to hold. This is really the test of an asset anyways, and if you trust in it, then just like any other asset that's out there, that's the whole idea. The reason why I'm watching this is because this is that kind of the line in the sand when it comes to, are we going to start to go more into that crypto winter? You can see that this was the bleed down and run sideways. Now you could say, well, let's cut this area in half here. So this is the drop right here that we originally had, give or take about just say 30%. So if you go back up to about 15%, that's right through here. So if I'm going to mark this half drop, that's somewhere like right in this area, and we can mark about half of the drop, so it's about 50-50. Well, where's that put that? Did we hit it? Yeah, we hit it, and we wicked through it, and now we're actually showing strength down there. We haven't got above it yet, and we're still limping through. But this right here is the big run that would be mimicking what we've already seen, so just stair step down. We could definitely look at this lower area, or like I just showed you, we basically are splitting half the run that we already went through. Now it went sideways, and we did half the run again. You definitely got the paycheck, if you will, on this area, and we are kind of rolling over, but you are burning out on the RSI. Everything's starting to burn out. We're seeing chop. Let's go back into the lower time frames. Let's look at the 1 hour. If I do that on here, of course, the indicator is going to be a little bit off here. So let's just turn it off for now. But we're right here on the 1 hour. This is the spot chart here that we're looking at. We are fighting right in this area around the moving averages. You can see they were spread out away from each other. We came down and we started to grind through them. And now we're really just starting to watch these things recover each other. So the same thing with the 4 hour. We've kind of recovered it, and then we started to still fall. But again, as we start to climb back up out of here, I know a lot of people are saying, well, this isn't going to make it, and blah, blah, blah. Well, let's just look at the key levels. Let's be smart in that way. Let's go ahead and see if we can start getting back above the key levels of support, which we're sitting, all the moving averages are starting to sit right at this key area. That is a strong floor. So it wouldn't surprise me if all of a sudden just creates the energy and breaks. And once it starts to break, you'll see it climb back up, and then it'll probably get up into that 82,000 range. Of course, I'm watching the 30 and the 50 exponential moving averages from the daily as well. You can see them coming down on price action. Once we start to get back above those, you can see way up here they crossed, and they were green before because they were bullish. You can say these are bearish, right? They crossed, pushed it down. Price action came back up, tried to push back up through it, and then got rejected and came on down, and came down with vengeance, which would make sense because this is kind of like your Bollinger Bands, right? And they're exploding again. They came really tight and they exploded apart with price actions moving together. So we're going to come back up in there. So more than likely, we will see some type of movement back up in here anyways, which will push us above that longer support that we were looking at out on the daily, which sets this up So we kind of really are just been sitting in this grind for the week. We're better than last week's, and if we go out on the weekly time frame here, this was our current candle that we're in right now. This was our last weekly candle. So this could just close, even if it closed where it's at this week. But next week, you could easily see this candle start to recover and come right back up through here and grind right on back up to this high area. So that is looking at the longer time frames. Really, be careful. Like I said, we're still sitting in key areas. Yes, if we reject, it could go on down. I just showed you some targets and stuff. It definitely makes more sense. Once we get it back above this key area, it's right below the 70,500 to 71,000. That's kind of what we're looking at here. Could be something to watch for. So let me go ahead and jump back over to our other chart that we do some actual trading on every day, and we're waiting for the setup. So you might be like, okay, well, what happened today? Did we get a trade? No, we didn't. We didn't take any trades today. So what we're looking for is we look at our moving averages, and once we look at our moving averages, we are measuring the possibility of certain moves. So when I'm looking at the possibility of certain moves, I want to see certain spreads set up on the daily support and resistance, the daily triggers as well. So you have breakout trigger, breakdown trigger. You can see that these were sitting on top of each other, so there's no spread there. It's basically considered zero. You'll find that if you trade this with this style, like we're always doing, anytime there is anything less than 0.5, it's not worth trading. You'll see chop. So if you go back and if you watch my recaps, or if I went back and just took segments out of them, I would show you the lines, of course, from that day, and you'll find that it's chop, right? Or it's breaking down, or it's breaking out. Well, that's because the probability is very high. So to kind of give you an idea, if price action right here, this would be considered a pretty aggressive move. The one thing you don't have in your favor is the wind, is what we call it. And it's the weekly bias is what you want. Right now, the weekly bias is it's going to take a while to turn the bias around, right? So we've been going down, down, down every week, so it's going to be bearish. And you're in a chop. A lot of people say, hey, it's choppy this week. Well, yeah, because you've been in a bias for a while of downwards, and you had that pressure. Well, the storm doesn't push forever, right? It eventually lightens up, and there's that transitional phase. Kind of look at it as summer and winter, probably a lot clearer, right? In the other two seasons, it's kind of the middle. They're the transition seasons. So you have the spring and the fall there. And a lot of people talk about winter because it's harsh, and a lot of people talk about summer because they're out enjoying the sun, but it's also could be considered harsh too. It gets hot, that kind of stuff. So they last a lot longer. But in between, it's kind of the adjustment. The trees are growing, or the trees are losing their leaves during the fall. Obviously, they're starting to grow in the spring. Flowers are starting to come back, and then you're in the summer. So kind of think of it that way too. And that's kind of where we're at right now. We're in the kind of that seasonal shift. We're in that shift to the next energy kicks back in. So that's kind of what I was just pointing out there on that weekly that we see right now. So you might be asking, well, what happened today? Why did you not take a trade? You had your triggers here. So here is the trigger here. Here's the trigger up here. The nice thing is you did have your daily resistance right underneath the trigger. So a lot of times when you see that, price action get above this area and close, you'll see a run up. Did we get to see that today? No, but I was watching for that. So we got the candles built out. This was the key area that we wanted to see hold. It kind of grinded down and tried to come back up in here. Now it could have pushed on up, and of course I would have started watching and trading that. And what I would have been looking for, if that's what you want to know next, is what would have got me in was the first candle that closed. So all I'm waiting for is, say if this price action broke above this and it did this, and there's your candle body, right? And then it has your wick up and a wick down. So that's all I'm looking for. The next candle that opens right here, that would be my entry. Because we got the entry, or we got the candle to close above the breakout area. So if that was going to be my entry, would be right through here. Where would I put my stop? Let me actually not erase the line 5 times. Okay, so if this was going to be my entry, I would just get in. Now, in this case, I'm going to put my stop down below the 30-minute high. Well, why would I do that? Because this has a high potential of a run because of the way this is set up. And really, I'm going to let this just run up, and I would be looking for key targets, right? We know 71,000 is a pretty hard line in the sand, so I might be looking at it for somewhere right in here to take this trade, because this is probably going to run up hard, but it will hit this. The one thing I'd be hold back on and be careful with is because the weekly bias is still bearish, right? It's not pushing the trade up in the upwards direction. So this already has that force against it. Now, if this was flipped and we were going down and we have the weekly bearish energy behind it, we could take it. So then if it started to break down, you're probably saying, well, why didn't you just take the bottom? You broke through the triggers. It's because there's nothing here. It's tight. So right here we have a very tight spread. There's no room for this to break down. And you're probably saying, well, it broke down. Well, if you follow that same rule, like I said, this would be your break trigger right here. Let's go ahead and zoom in so it's easier to see. Make it nice and big so we can really see it here. So here is, actually, let's make it a little smaller so you can see where I'm going to have to put my stop, because the same rule, if I'm breaking down, I'm going to put my stop at the 30-minute high. This is a very big spread. There's some different strategies you could do here if you have the right spread here. Anything over 0.5 is what we're looking for. If it's within that, then it's too tight. So if I was looking at 0.5, I would be measuring out. It'd have to be at least right in this area, about where the current price action is right now. If that's where that 30 or that daily support was at, then I would be looking at taking this trade down. And like I said, we had the first candle. This would have been closing on the trigger if this was a setup. I would have looked at getting in right in here on this next candle. It could have actually been on the 5-minute, right, and got a better entry back up here on this wick. We definitely could have looked at taking that. But I definitely would be looking at taking my 30-minute high as my stop. Now, there is another trade that you could build if you understand a little more. You could take this candle that you got the confirmation on. You can go to its high if you wanted. So you could tighten this trade up. And then go ahead and trade it down. Typically, you're looking for like a target 2 trade. Now, why didn't I take that today? Like I said, it's because my rules say no, don't trade, because I don't have that 0.5 of a spread. Typically, when you see this, it could whipsaw back up through here and not trade out. This could have easily just came down, turned, and came right back up, and then just played the game in here the rest of the day again. Just like it actually kind of came down, and now it's kind of building back up. Wouldn't be surprised if we all of a sudden are above this and then rebuilding by tomorrow morning again. But that's just me giving you guys some work through on price action, how to read it, why we're doing what we're doing, also so you can understand it. Now, if you can go to Cabroto.com, because you might be thinking like, okay, well, great, how do I get these levels on here? And why are you using these levels? Like I've said before, these levels are looking at the last 24 hours worth of data. They also, when these high time frames are built, which is your daily support and resistance are looking at. That's also looking at your 1 hour, your 4 hour, and then which will bleed into your weekly and daily. So you have, that's what the power is in these lines that I'm referring to. These are your support and resistance lines. That's why they're so powerful. And then we've done back testing on what I just kind of told you about today, which is the spread that shows strength in the trade. And then you also have your weekly energy in the space, which is that wind that's going to push the trade up through today, just like you saw this trade out through here today. But that is about it, guys. I'll go ahead and leave you to it. We'll see you on the next recap, which will be tomorrow on Friday. And we'll go ahead and go from there and see how we're going to move into the weekly candle. Obviously, the closer you get to the end of the week, the less you want to be watching the price action from that prior week, because the further you get away, the less energy is in that candle. So, all right, I'll see you guys in the next recap. Talk to you guys soon. Thanks, guys.